everybody, Buffy the Rate Slayer here, and we are back with the fourth episode of the April 2022 Weekly Market Insight Series directly from the Capital Markets Trading Desk at Sunwest Mortgage Company. A seesaw session with the focus on Fed speakers, rising inflation, and obviously statecraft agitation. U.S. stocks majorly rose with earnings in focus while treasuries were pulled back as a growing chorus of money managers said that inflation is nearing a peak and rate hike bets are overdone. The Federal Reserve mentioned the same thing in its Beige Book survey that was released this Wednesday. Inflationary pressures remain strong since the last report, with the firms continuing to pass swiftly rising input costs through to customers. In the U.S. earnings report season, the signs are encouraging so far. Over 90 S&P 500 companies that have posted results, 80% have beaten the estimates. But the concerns around rising inflation and its effect on economic growth is prompting investors to sell out bonds, pushing up the yields to the highest levels of the past few years as traders priced in the prospects of aggressively higher interest rates to control the inflation. Fed's James Bullard said the central bank needs to move quickly to raise interest rates to around 3.5% this year with multiple half-point hikes, and that it shouldn't rule out rate increases of 75 basis points, leaving the market in budding concerns. On the same page, Fed Chair Jerome Powell rooted a half-point interest rate hike next month and signaled support for further aggressive tightening to curb inflation at the IMF-hosted panel in Washington on Thursday with European Central Bank President Christine Lagarde and other officials. So let's dive in to know more about the key market influencers of this week. All right, as far as one can tell, the impact of invasion has evidently sparked a sharp rise in prices of oil, grain, and other commodities. Oil reached above $103 on signs of an accelerating decline in Russian production, and as a report pointed to drop in the U.S. crude stockpiles. Meanwhile, Russia has begun a new phase of its invasion by launching a full-scale ground offensive to take control of Ukraine's industrial heartland, the Donbas. On the flip side, the Biden administration is preparing to announce another $800 million in weapons and support for Ukraine. U.S. Treasury Secretary Janet Yellen led a walkout of officials from a group of 20 meeting in Washington when Russia's representatives started speaking. In the face of the supply chain woes and obviously the rising inflation, new business owners are jumping on the opportunities created by the reopening of offices and easing of COVID-related restrictions. Hotels and travel, nightlife, and beauty salons saw the biggest gains in openings last quarter. Business openings surged past 150,000 last quarter in the U.S. Applications for U.S. state unemployment insurance fell slightly last week, stating an exceptionally tight labor market. Initial unemployment claims decreased by 2,000 to 184,000 in the week ending April 16th. The Federal Reserve poised to announce asset runoff in May, with mortgage-backed security sales potentially started in late 2022 or early 2023. Total runoff caps expected to reach $95 billion by late summer. However, it could still take several years to reach pre-pandemic levels and shift the portfolio primarily toward treasuries. Let's now get to how the housing market is doing. Feels like it has started to have an impact of continuously rising mortgage rates and higher inflation. Mortgage rates have already climbed to a 12-year high and could steep up in the following months. U.S. mortgage applications slid for a sixth straight week. For the week ending April 15th, the MBA's refinancing index decreased over 7% to the lowest level since March 2019. Purchase applications were down more than 3% this week. Sales of previously owned U.S. homes fell in March to the lowest since June 2020, and historically low inventory paired up with the rising mortgage rates curbed purchases. Contract closings decreased by 3% in March. Well, the threats from the inflation are obvious. The Federal Reserve is expected to deliver a series of benchmark interest rate increases in coming months and has said it will implement a plan to begin reducing the size of its balance sheet. So folks, that's all I've got for you this current week. Please, as always, join us again next week for more market updates. Stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have a happy Friday, everyone. Hey, have a great weekend too. Buffy out.